Hi traders, welcome to the first webinar in the Fibonacci series. And in this webinar we will start with the Understanding Comprehensive Fibonacci Retracements Analysis. This is part 1 of 2. We will reveal every week a new webinar on Fibonacci's. Why we are doing this? Because we received actually a lot of questions regarding my analysis, how I draw these, and how to understand the full material of Fibonacci analysis. So for this reason I decided to make a full video course which will include, I think it will be about 6 courses in total, each of around 30 till 45 minutes. If you have any questions, just comment below in the comment section, you can write them, or just mail us or text us by Facebook. We will try to reply within 24 hours on each and every question. Also, don't forget to give some feedback in our webinars, because we highly recommend to receive some feedback, and as well we want to improve our services for you. So guys, we are going to start with this webinar, and in the first section I will try to explain you what you guys are going to learn in the next in this webinar. So in this webinar we will learn when do you actually use the Fibonacci retracements, what are the retracements levels which you use in the Fibonacci retracements analysis, how to draw the Fibonacci retracements, because this is one of the most difficult part, how to read the levels, and we will talk a little bit about simple support resistance clusters. And these are also very important. So, when do you use Fibonacci retracements? Well, actually, if you have running a trend on a certain financial asset and the price is reversing, you would like to know till what price the reversal is going to continue, or what is the ultimate price of the trend reversal, or is the trend going to continue in the same direction. Those are the questions you want to answer with using the Fibonacci retracements. So to give a small recap of everything, we use the retracements as an analytic tool to forecast price changes. Well, that's obvious. We use retracements to determine developments during a trend or correction of a trend. With retracements, we can define the movement of a financial asset after a trend or correction. We can use Fibonacci retracements to make profits by trading these moves correctly. So this is actually saying that we can implement trading strategies by defining the ultimate price after a trend reversal or the ultimate price after a trend continuation. So therefore we can use the Fibonacci retracements tools, and we are going to explain you how we can do this and how we can find some really good entries within a certain retracements of a trend. So this will be covered in part 2, however, but in the first part we are going to, in this webinar we will try to explain you how we can draw these Fibonacci retracements and how we can implement it and how we will read them. So this is the most important part, and to start with, if you want to use Fibonacci's at all. Also in the next future, if we come to the next webinars, you always need to know how the retracements are built and how we construct the Fibonacci's on different time frames, and how we construct the Fibonacci's on a down and an uptrend on the same chart. So therefore we are going to use this webinar to explain you a bit more in detail, and to and giving some examples of every certain subject. So let's move on to the next subject, which is actually the retracements levels. So in the comprehensive Fibonacci analysis we actually have 6 retracements levels, which are 2 of them are key, 2 of them are strong levels, and 2 of them are not key nor strong levels, but very useful for finding great entries on certain retracements. This will be covered in part 2, however, this won't be for this webinar. So, however, these the 9, the 14.6 and the 23.6, you won't have them as default on your MetaTrader 4 or G4X or whatever you are using on your platform. So you need to add these to make a certain custom presets in your Fibonacci retracements tool. So therefore you will find of course you have the 0 and the 100%, which is 0 implements the start of your retracements and the 100% implements the end of your retracements. If we see that the 9% is actually, how we come to the 9% is actually the value obtained by subtracting the 14.6 and the 23.6. So if you subtract 23.6 and 14.6, we receive the 9%. And this is exactly the same what we do with the 14.6 and the 23.6. This is also the reason why they are so important. We will come later to this for the 14.6 and 9%. For now, we only need to know that the 50% and the 61% are the keys, and the 38.2 and the 23.6 are the strong levels. In a later subject in this webinar, we will come more in detail to these levels, and you will also find how to construct and how to read them properly on a chart. So, the next subject is how to construct Fibonacci retracements correctly. So this is divided also in two parts because it's slightly difficult to explain you guys how to do this properly. So in the first case, we have the ultimum low and the ultimum high. So we always draw from the low till the high. However, if the low and the high, which we call leg AB, then the C leg, which happens after the AB, which is the retracements, should not exceed the 61.8%. So we also include the retracements on the candle shadows and not on the open and close price. I will give an example. In the next chart you will find an example of this. And we are going to try to implement more retracements during this webinar by giving some more examples. So in the next chart you will find a correct example on how to draw the Fibonacci. As you can see here in this top and this top, then this top is exceeding the 61.8% level. And this is also the reason why I didn't draw my ultimum high from this point, however I did it from this point. And this is also the reason why we always keep doing this. If we draw on a certain time frame, then you always draw your Fibonacci's from the point on which hadn't been broke to 61.8%. So if I take this low till this one, or this one, or this one, or this one, the highest point during A till B has not breached the 61.8%. That's a hard rule, and we need to make a note of this. I've concluded this in 2 sentences. So this is also part 2 of 2. Always ask the question, what is the correct trend to construct the Fibonacci retracements? Always note that the 61.8 is final price, which means if the next price within your Fibonacci construction 61.8 has breached, you need to reconstruct your Fibonacci retracements. So now we go to an example in our chart to explain you guys a little bit how I define this chart. This is already a chart which I made for this webinar. We will come later to the cluster Fibonacci's. For this webinar we go to for this part we go to a blank chart, and I'm going to explain you guys how to construct the Fibonacci also regarding to the time. We will have some handout later on the time. Be in mind that if you want to construct on a monthly time frame, which is quite possible if you take the monthly time frame, then you can look not more than 13 years back in the past. 12, 13 years, which means if you go from 2019, we go not further back till 2002, which is actually 2005, which is around this area. If we go, however, if we would like to sort out the Fibonacci retracements, then I will show you guys what is wrong and what is right. If I would do like from this top till this low, then you would actually say, well, the price reverses exactly on the 38.2%. However, this is a false read of the Fibonacci retracements. If we would do this, then you have a wrong interpretation, and you will see that it will not work out well. However, we take this high, and now you can see that the price almost reached the 61.8%, which is actually a key level. So this is a correct construction of the Fibonacci retracements. And the other one was obviously wrong. If we go back to a 1 hourly chart, we'll delete this one. Also, we'll delete this rectangle. If you go to a 1 hourly chart, then you can go back to, let's say, 2 weeks in the past to find to construct a good Fibonacci analysis. So which means for now we are the 29th of March, so we can go back to, let's say, the 15th of March, around that area. So if we would put a line around the 15th of March in the early morning session, and we would do a retracements, then you will see that there cannot be built a retracements level from here. The only retracements level we can build is actually from this high till this low. However, the trend is not really reversing from this point on, so we expect if the 0% is breached, then we expect trend continuation to a next level. And therefore we will use to define this ultimate price, we will use the Fibonacci projections. Okay, now we are going back to our webinar. So back to the time frames which I was mentioning earlier. The monthly time frame, you should maximum looking 30 years back in the past. On the weekly time frame, you can look back till 6 years in the past. On the daily time frame, max 2 years, and so on. If this is not clear for you, come back to me and I will explain you in detail. Maybe we can do a one-to-one session for our members. Not a big deal. So here you get another chart of a correct implementation of Fibonacci retracements. And as you can see, this is on the weekly level. So you have a weekly chart, and you see that I took the low and the ultimate high. And this one fits perfectly in my chart, and this was also the reason why we called it a trade last week on the 111.86, because I really wanted that level till we had a buy, and I did a TP exactly on the 50%. Why I did the 50%? Because the 50% is a key level and the 61.8% is a key level. In the next slide I will explain you a little bit how we can read these levels. And this is also very important. The higher the time frame on which the retracements are built, the stronger its levels are, which is quite obvious. If you have a monthly time frame and you build in Fibonacci retracements on those levels, they are very strong. Especially the 50 and the 61.8 should be really well respected. If you have a cluster Fibonacci levels on those levels, where we come later in this webinar, then you have actually a really good entry point for having a trade plan. So 9% and 14.6 act not as a strong support resistance level, but these levels are used for great entry opportunity during retracement at early stage. Like I already said in this webinar, we will discuss in part 2. The 23 and the 38.2 act as a strong support resistance level, but not as key level. 50% and 61.8 should be considered as a key support resistance level. In the next chart, I will explain you guys how to do cluster Fibonacci resistance and how to find cluster Fibonacci support and resistances. So therefore I use the same chart as we had just on Euro USD, and you actually can see that I drew the retracements on the weekly and I drew the retracements on the daily, and then you can see actually very well that this cluster is very well being respected by the market, and obviously the 61.8 has been respected by the market as well on the weekly time frame, because this is a high level Fibonacci retracements level. Now we go into examples to explain you guys how we came to these levels. So let us get a chart on. I hope we find some good levels on GU. However, GU is a little bit difficult in this moment because we are suffering some Brexit, also some fundamentals. Fundamentals are going on GU about Brexit. That's what I wanted to say actually. Therefore, it's slightly more difficult now to find good Fibonacci retracements. However, they're really good to find. So let's assume the price is at this stage over here, and we are searching on the 1 hourly time frame, so which is around this level. And you can see that if we draw the Fibonacci retracements from this level till this level, you can see that the ultimate 61.8 hasn't been breached by 2/3 of the candle. So we take this one in note, and you can see how well we respect the 61.8%. Once the 61.8% has been breached, we cannot use this Fibonacci retracement anymore. So we need to draw a new one. And this is exactly what we are going to do in the next part. So we're going to take the new Fibonacci retracements. We take this one into credibility. You can see that this top hasn't breached the 61.8%, so we could use this as well. Very good on a 1 hourly chart. We go back a little bit in the past, and here you can see actually very clearly that the price has breached the 61.8%, so which means we expected actually more trend continuation. Now, of course, during Brexit events, the price didn't continue in the right direction. And we also had some really major resistance on the Fibonacci projections, which we will cover in the third course of this Fibonacci series. And therefore, the ultimate price of the trend correction on the trend retracements was actually 132.70, around 132.60 levels. So on this point, many questions would be like, okay, how can I construct the Fibonacci retracements on this chart? Well, actually you can't, because the ultimate high and the ultimate low is on the last leg, and this is not even 2 days or 3 days in the past. So we should search for a higher time frame to look out for Fibonacci retracements level, which is actually 4 hourly. In the 4 hourly we can go back like oh, I'm sorry, I did something wrong. On the 4 hourly we can look back like 2 months at least, and then you will see that we can construct a clear Fibonacci from this spike down till this high up. And as you can see now, the 38.2% has acted as a really strong support level multiple times on the Fibonacci retracements. And now I'm expecting to go further down till the 50% mark, which is a key Fibonacci level, and this should be reached within a couple of days. So if we talk in cluster Fibonacci levels, so I'm going slightly a little bit further to find some really good clusters on the Fibonaccis. So now we have identified the 4 hourly Fibonacci retracements level, and now I'm going to try to identify the cluster Fibonaccis. I'm a little bit struggling with my chart, I'm really sorry for this. So I take this high and I'm going all the way back till this low. So my 0 and the 100% are now exactly the same. And I'm going to give this another color. And now you can see very well that we have some major clusters. So we had a major cluster on the 23 and the 38.2%. You can also see that this 50% was almost have been reached. It was like only, I think, 50 pips or something, and which is not much on GU on a daily time frame. And for now you can identify the next key cluster, which is around the 50%, and the 23.6 is the next key cluster. And the next level after the key 50% with the 23 will be the 61.8%. In my opinion, if the fundamentals doesn't change on GU in the next coming days, then we will see the 50% and together with the 23.6%. And then we also have a really nice pattern to go further up back to the 61.8 in the next couple of months, maybe years. It will take a long time, however. So this is about how to identify Fibonacci retracements and how to trade them properly. The clusters, we will come back more to clusters once we have covered the projections as well and the internal patterns. So therefore I will go to my last slide actually, and this is understanding comprehensive Fibonacci retracements analysis. Will be done in part 2 with the auxiliary Fibonacci retracements, which help you identifying cluster levels, identifying key clusters, how to do this, and how to have some good trading strategies regarding to this. Then we will talk about the internal patterns 1, 2 and 3, and of course we are going to talk about these patterns trade strategies. Feel free if you have any questions regarding these regarding this webinar, and feel free to give any feedback as well. I wish you all a pleasant day, and I hope you enjoyed this webinar. If you have any questions, don't forget to comment me. Bye bye.